We've opened in the green a tad bit, really. I mean, you'd have to say it's absolutely quiet at the moment.
After opening at levels of 18,340, the Nifty's added on close to about 50 points.
At the day's high, the Nifty is up 120 points.
The Nifty bank high today is 44,151.70. And the all-time high is 0.80, 44,151.80. And then there is a bit of a slip which is emerging. We will end the day on the Nifty bank at, 44,062. Maybe you get decent global cues, and tomorrow there is a gap up. You'll take out the high, very, very close by, the high of 44,151, which we got to, and then the market sold off.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Sensex and Nifty end at 5-month highs as bulls maintain the winning momentum on Dalal Street. Nifty Bank Index ends at a record high. Auto and real estate stocks lead the charge. Tata Motors gains on JLR, posting healthy growth on better chip availability. Strong cash flows, debt reduction and hopes of a strong JLR showing in FY24 drive up the stock. In earnings corner, Colgate sparkles on a perk up in margins. Growth and better asset quality lift Manappuram Finance, while a jump in bookings props up DLF, but a weak show hurts Avenue Supermarts. Supreme Court defers hearing the Adani Hindenburg case. Market regulator SEBI files a fresh affidavit reiterating its request for a 6-month extension to probe the allegations. SEBI says it has approached 11 overseas regulators in connection with a probe on minimum public shareholding norms, and the first request was made in October 2020. As India's April CPI comes in at a 19-month low of 4.7%, market bets RBI will change its policy from the hawkish pause in April to a dovish pause in June. Meanwhile, the WPI number comes in at a 34-month low. The 10-year bond yield slips below 7%. And here's the lineup of what we have in store for you. It's a packed show today. In the market opinion, we have Rahul Arora of Nirmal Bang Institutional Equities and Rupal Agrawal, who is a senior research analyst, Asia Quantitative Strategy at Bernstein. In Big Corporate Voices, we have Umang Vora, Managing Director and Global CEO of Cipla. But as always, let's start the show with the market action. A sharp rally in auto and real estate stocks took the Sensex and Nifty to their highest level in the last 5 months. Sensex gained over 300 points and the Nifty gained 80 points. The Nifty Bank Index gained nearly 300 points, ending the day at a record close. Prashant Nair is here with the market wrap. Prashant.
Well, so close, yet so far. Not very far, but not quite there. That's, I think, the best way to describe things. And I'm talking about not the Nifty, but the Bank Nifty, which came within 10 paise of hitting an all-time high, the previous all-time high of 44,151.8. We got to 0.7 today. And then, of course, I mean, after that, in the last hour, the market did come off a little bit, which put some more distance between where we closed and where the all-time high is. In sports parlance and, for example, football, you could say that the goal was missed. The ball hit the goalpost, the crossbar, but didn't quite go into the nets. Maybe tomorrow. We're not very far away. The Nifty is about 2% away, though, to be fair. Let's come to the market action in terms of what happened. Broader markets, both the mid-cap and the small-cap parts of the market did better than the Nifty and the Bank Nifty, about 0.75% gains there. Market breadth was positive. Large-cap stocks which did well, Hero, Tata Motors, ITC, Tech Mahindra, Lever, Hindalco, a few names. Losses in the Adani Group stocks, Cipla, BPCL, many of them, of course, reacting to earnings over the last 3 days. Broader markets, buzzing. DLF, I mean, big gainer on the back of volumes. Zensar Technology, Newland, for the second day in a row, did very well. Soba Developers was the other big real estate name which was buzzing. GE Shipping, we had the management with us. Ujjivan Small Finance Banks continues the rally, results rally from last week. VST Tillers, LG Equipment, Prestige, Repro, and so many others which did quite well. Losers as well in the broader space. Home First, we understand some private equity investors sold. D-Mart, apart from Adani Enterprises, Transmission, Total Gas were also down. Ethos saw a sharp cut. South Indian Bank, CET, which has seen a sharp rally, came off as well. These were a few amongst many others as well. I mean, I think all eyes will be on all-time highs, especially for the Bank Nifty. Will we get decent global cues, and can we get to that as we start another session tomorrow morning, right at the word go. I think that's front and center in terms of mind space as we go into tonight's Wall Street session and, of course, look forward to tomorrow. Back to you.
Prashant, thank you so much for that take on markets. Moving on to market opinion now. Rahul Arora of Nirmal Bang Institutional Equities said that IT, banks and FMCG stocks will need to participate from an earnings perspective for the market to be able to hit new highs. Speaking about sectors, Rahul is betting big on the auto sector and prefers stocks like Maruti and Eicher Motors.
Bank valuations may actually be tough to sustain at these levels because NIM compression is very visible sequentially in some of the banks. FMCG, while if you look at it in pockets, has been okay. A Nestle or a Lever has been okay. Asian Paints pretty much blew the lights out. I was very surprised with those numbers. But still on the rural side, you aren't seeing that kind of commentary. And then you have IT, where you had a soft quarter in the backdrop of, again, like I said, a not so bad US quarter. Right, and that worries. So if you take FMCG, IT and banks, that's about 60% of your market right there. But if these three sectors don't participate from an earnings perspective, it's a little hard to make a case for the market moving higher or even making new highs. Auto is a good sector to be overweight at this point. I think if you're playing it through passenger vehicles, I'd say probably play it through Maruti. If you're playing it through two-wheelers, I think Eicher is going to be the pick because what I was saying about FMCG volumes on the rural side, I think that would probably apply to the mass two-wheeler players. But Eicher had a remarkable set of numbers. The CV side, I think you can play it either through Tata Motors or Leyland. I think I don't think valuations are. Especially for Ashok Leyland, for that matter, for the kind of return ratios and EPS. I think between FY23 to 25, I think our own EPS estimates are about 2.5x is the kind of growth that we're seeing in EPS in Leyland. And that backdrop and the kind of return ratios, I think at a single-digit P, I don't think it's coming to you at, 9-10 times on an FY25. I don't think it's that exorbitant.
All right, that's some market opinion coming in. Moving on to the second headline now. Tata Motors rallied over 3% after its luxury car arm posted a healthy growth in the fourth quarter on the back of improved chip availability. Margins grew 270 basis points on a quarterly basis. Brokerages also turned bullish on the stock. Sonia Shenoy joins in with more. Sonia, good showing by JLR. What do the brokerages make of Tata Motors now?
Well, thanks a lot for that. As you rightly pointed out, Tata Motors is the big mover today. It's hit a fresh 52-week high. In fact, it is the biggest Nifty gainer in 2023. It's gained over 37%. And the reason for that is a consistent improvement in the Jaguar Land Rover business as well as deleveraging of the balance sheet. So here are 5 top reasons why, the earnings has been liked by the street. First, of course, is the Jaguar Land Rover performance, which has been very strong this time around. The EBITDA margin improved 200 basis points year on year, coming in at 14.6%. Not just that, in the commercial vehicle business as well, the EBITDA margins have come in at a 17-quarter high of 10.2%. But I think what the street really likes is the fact that the deleveraging of the balance sheet is something that continues at a steady pace. So the debt of the company has gone down substantially. The net auto debt has gone down by almost 14,000 crores quarter on quarter, coming in at 43,700 crores. In fact, the India net debt is at the lowest we've seen in the last 10 years for Tata Motors. Not just that, the investors are now quite confident that Tata Motors will be able to deliver on its guidance of touching £2 billion of free cash flow in FY24. In fact, brokerages have gone ahead and raised their target prices and earnings estimates on Tata Motors. So on an average, Goldman Sachs, CLSA, Nomura, Jefferies all have target prices anywhere between 600 to 660 rupees, while JP Morgan and Kotak have it between 450 and 500. So bullish views coming in on the stock. Back to you.
Sonia, thank you so much for joining us with that analysis on Tata Motors. Moving on to the third headline today. Colgate soared 4% after it beat estimates in the fourth quarter. Margins, which came in at 33.5%, helped the firm deliver a strong set. Manglam Malu is here with the analysis. Manglam, what do brokerages make on the stock? They're bullish, right?
But as far as Colgate's numbers are concerned, not much was expected on the top line this time around because of the weakness in the category growth itself. But where the company has surprised positively is the operational performance. So the revenues have come in at 1350 crores. This against street expectations of around 1347 crores, so largely in line. But here's where the magic is. The EBITDA, 452 crores. Most on the street were working with a number of around 400 odd crores. And as a result of which, both the margins as well as the net profit have been above expectations. The gross margins of the company have been around 66.9%, which is largely the same as last year, but where the company has scaled back is ad spends. They've saved around 70 basis points in ad spends, and that's caused the EBITDA to move higher as well. In her first full quarterly performance after taking over as MD, Prabha Narasimhan has said that for FY24, high single-digit sales growth is possible. At the same time, they see sequential improvement in the company's gross and EBITDA margins, though some of the gross margin savings will be plowed back into ad spend, so as a result of which the EBITDA margin expansion will be limited. But that's not something that the street is too worried about, mainly because the company has gone ahead and improved their product range as well. They've relaunched Colgate Strong Teeth. At the same time, they see higher scope of revenue coming in the 40 rupee plus toothpaste category, which is about 1/3 of the market, but growing between 30 to 40%. And they've increased their distribution reach by 30% as well. So all these things should augur well for the company in FY24, and that's what the street is betting on.
Okay, that is about Colgate, but Mangalam, stay with us. Avenue Supermarts fell close to 4% on the other hand. It was a weak showing in the fourth quarter. What did you make of the numbers and what did the margins look like?
Well, one wonders what's ailing D-Mart, because it was an investor's darling. From its issue price of 299 rupees, it had rallied all the way 18 times, as of October 2021. And even if you bought it at the listing, you would have been sitting on a 9 times gain by that time. But since then, we've seen a 30% decline in the stock price. In fact, it's underperformed both the Nifty as well as the mid-cap index among all the other stocks. There are macro reasons, which is basically COVID-led disruptions. The second one is, of course, inflation, and as a result of which there was weak consumer sentiment. And the third most important one, there was fair amount of competition as well coming in from large conglomerates like Reliance as well as Tata Group's Zudio and Max as well. But on its own part as well, the company's own store expansion was rather low. We had the company add stores at the tune of 30, 40 over the last few years every year, and the total stores stand at 324. Compare this to Reliance, which added 966 stores in the fourth quarter itself, and in fact in all of last year Reliance has added almost 3,300 stores. Reliance's overall store area stands at 13.5 million square feet compared to rather D-Mart's overall retail area stands at 13.5 million square feet compared to Reliance at 65 million square feet. And even if you look at the sales per square feet, it hasn't recovered to pre-COVID levels. What could be the biggest reason for that? It's the lack of demand in discretionary segments, because as a proportion of their sales, general merchandise and discretionary is still 23%, and this number pre-pandemic used to be 28%. As a result of which their return on capital employed too has fallen below pre-pandemic levels and not recovered to those levels as well. The only couple of things to watch out for now going forward, apart from recovery in demand, is how their D-Mart Ready, which is the e-commerce business, pans out. Secondly, valuations. Despite the correction, we've seen the stock trade at 74 times 1 year forward and 2 years forward multiple close to 59 times. If they start to add stores faster, and finally if we see their new vertical, which is the in-store pharmaceutical stop vertical, increase, we will perhaps see D-Mart's glory days come back.
Okay, time will tell. Thank you, Mangalam, for joining us with that take on D-Mart, Avenue Supermarts, that is. Moving on with the earnings reaction itself, Cipla fell over 1.5% after it pushed back the release of its key drugs meant for the US market by close to a year. Speaking to CNBC-TV18, Umang Vora, the MD and Global CEO of Cipla, said that margins were better than anticipated and he expects margins to be between 23 to 24% going forward. Take a look.
Margins are better than what we thought they would be in this quarter. I think if you're comparing it with quarter 2 and quarter 3 of the year, that comparison has the issue of India season and the respiratory season from the India business built into it. So I don't think that's a valid comparison. Typically for us, quarter 4 is always our lowest margin quarter. So this year we guided for us to be higher than 22%, and we're roughly there. We'd also taken in quarter 2 or quarter 3 charges related to the COVID inventory. So if you adjust our EBITDA margins, we were at 23% for the COVID inventory that was written off. I think we expect it to be higher than this in the next year, but in roughly the same range.
Okay, with that, let's move on. Manappuram Finance was up by 1% in today's trading session after reporting strong set of quarter 4 numbers. The company's net interest income came in at over 1180 crore rupees, which is up nearly 20% on a year-on-year basis. Abhishek Kothari joins us with more details on this one. Abhishek.
Well, they came out with their Q4 numbers, which were ahead of our week poll. So in terms of the gold book, that's losing its sheen. The share of gold loans is declining in the overall AUM. It is now at 55.7% when compared to 66% plus in the same quarter last year and above 58% in the previous quarter. So the gold tonnage in volume wise is the second lowest that you are seeing in last 22 quarters. Calculation shows that the net interest margin has declined on a sequential basis. Analysts say that, this could be on the back of the fact that they are losing out on yields on the gold portfolio as well. So the NII has come in at 1,183 crore. We were working with a number of close to 1,075 crore, while the PAT has come in at 415 crore. We were working with a number of 394 crore. The positive surprise in the result was the Ashirwad microfinance, where the gross NPA ratio has now come down to 2.8% when compared to 6.7% in the previous quarter. There was also another release from the company which says that VP Nandakumar has received an interim stay order from the High Court of Kerala. This is for 2 weeks beginning 12th of May 2023. Order directs him to take prior approval from ED if at all he intends to deal with his movable properties. Nandakumar will approach the High Court for modification of the conditions that's been mentioned by the court. Back to you.
That's Manappuram. It closed flat with some positive bias. The stock was in focus on the back of earnings, but the sector of the day definitely was real estate. The index was up 5%. It's a fresh high that we have seen. DLF was the one that led from the front, and it rallied almost 7% in trade today, and that is led by a strong set of earnings that the company reported. If you look at the bookings trend now, 8,400 crore rupees, that's in the quarter gone by is what the company reported, and that compares with a quarterly average of around 2,500 to 27 crore rupees. So that's a big jump that the company has seen. 90% of these new bookings came in from the newer projects, and most of them were luxury projects, especially the Yaba that saw massive bookings just at the opening for the company. Collections too at a record high at 1929 crore rupees, which is higher on a sequential basis. Balance sheet also looks good for the company. So the net debt has declined to levels of 721 crore rupees, which compares with 2,091 crore rupees on a quarter-on-quarter basis. Just mapping the annual booking trends, and you will see that it has been continuously going higher from levels of 2,400 crore rupees in FY20 to 3,000 crore rupees in FY21. It is coming at 15,000 crore rupees, which is the highest in the listed space this year itself. New launches as well from levels of 1.6 million square feet. They have gone up to levels of 10.10 million square feet in FY23. Most of them high-end luxury projects. Even the rental arm DCCDL did really well. Revenues were up 20%, EBITDA was up 21%, and profits were up 37% to come in at 394 crore rupees. CLSA says that company's pre-sale guidance of 11,000 to 12,000 crore rupees for FY24 looks conservative. They have raised their pre-sales estimates by 21% and 14% for the next 2 financial years. JP Morgan has an overweight rating. They have increased the target price to 510 rupees per share. They say that the residential business is now almost debt-free. That is for the first time that it has happened in the last 15 years, and that definitely is a positive. Not only DLF, the likes of Sobha, Prestige, Ajmera Realty, be it Mahindra Life Spaces, all these stocks together were higher in trade today, and there's some rub-off impact that we saw from DLF in other stocks as well. That's all the earnings roundup that we have for you. It's time for a break now. Stay tuned. We'll be back in a jiffy with the other headlines.
Yes, it's okay for us to nod for everything. Because we are parrots.
From the current surge in commodity prices.
Has the Indian investor warmed up to commodity in their portfolios? And are there enough instruments available?
Get the complete lowdown on commodities. All the exclusives with analysis and experts from across the world. Commodity champions at these times.
Welcome back. Still tuned into markets today. Let's go to the rest of the headlines that we are tracking for you. To the fourth headline now. Shares of Adani Group stocks ended the day in the red. Adani Enterprises and Adani Green Energy slipped nearly 3% each, while Adani Transmission and Adani Total Gas tanked 5%. This largely comes after two of the group companies announced plans to raise up to 21,000 crore rupees from qualified institutional buyers. The combined market cap of the conglomerate has dipped by 25,000 crore rupees in the last 24 hours and nearly 10 lakh crore rupees since the Hindenburg report was published. The Supreme Court has deferred hearing the Adani Hindenburg case. Market regulator SEBI filed a fresh affidavit reiterating its request for a 6-month extension to probe the allegations. SEBI has said that it has approached 11 overseas regulators in connection with the probe on minimum public shareholding norms, and the first request was made back in October 2020. Ashwin Kumar is here with more on this. Ashmit.
Indeed, two important revelations being made by the market regulator for the first time, putting it on record in an affidavit in a court document. Here what SEBI says, number one, is that as far as the investigation is concerned, it is calling it the investigation into minimum public shareholding norm violations. That's the investigation that SEBI is looking into. And towards that end, SEBI's case essentially is that, look, this is a case which spreads across multiple jurisdictions, that this will require voluminous documents and transactions that need to be looked at, that need to be considered. And as a part of that, SEBI then says that they are in touch with 11 overseas securities regulators to source this data, and information about the transactions in question, number one. And importantly, SEBI also states on record for the first time that the first request that had gone out was way back in October of 2022, which significantly predates the Hindenburg report, which came out in Jan this year. So that is something important to bear in mind that SEBI has brought to the court's attention. That was one. The other, of course, came on the back of allegations and suggestions that were made by petitioners during the last hearing that SEBI was seized of the matter as far back as 2016. Now, in response to that, as a clarification, what SEBI says is that, yes, indeed, there was an investigation into the issue of issuance of GDR, that 51 listed entities were subject to that investigation. But SEBI is also quick to point out that none of those 51 listed entities which were subject to this probe included any Adani Group entity. So that is the clarification that SEBI is giving, that 2016 is not when they began investigating. This investigation into MPS norms or minimum public shareholding norms began only in October of 2020 when they started sending out queries to these overseas regulators. That's the two important points they've put across. Third, they've said is that they've reiterated their claim and their request for a 6-month extension. The matter was supposed to get taken up today. It could not for want of time. So all eyes now on the top court to decide on this SEBI application on this 6-month extension demand.
Ashma, thank you so much for joining us with all those details. Important case to track as well. Moving on to the fifth headline now. As India's April CPI came in at a 19-month low of 4.7%, market bets that the RBI will change its policy from the hawkish pause in April to a dovish pause in June. Meanwhile, the WPI number came in at a 34-month low. Lata Venkatesh is here with the details and her take on this one. Lata.
The more important story is the IIP and not the CPI. Normally, we concentrate on CPI because that is the number which the MPC uses to make policy. It is mandated to keep inflation between 4% plus or minus 2%. So CPI is important. But it's come in at 4.7 compared to our expectations or our poll of 4.79. So that clearly indicates that the Reserve Bank, which paused in April, will not have any reason to change its decision in June, because the last number it gets for inflation is this April CPI number, and that is moving closer to 4%. So they will have little reason to move. It's the lowest number we've got in about 19 months. CPI food is also coming in at 3.84%, which clearly shows that all those wheat procurement worries about late monsoon, worries about untimely rains are all nullified, and food prices have indeed fallen. In fact, cereals prices in March are lower than they were in April, according to the index number. Therefore, worries on inflation are more or less ebbing at this point in time. The bigger worry is the growth worry. IIP coming in at 1.1% against a CNBC-TV18 poll of 3.8%. The April to February number average is actually 5.6, and therefore this 1.1 is seriously a worry. It comes on the top of a 3.6% core sector growth, clearly indicating that there are worries on the growth front. Just for the internals, the big worry is power. Electricity is minus 1.6. Now, that clearly indicates that there's something wrong with the consumption as well. And then consumer durables and non-durables are both weak. Consumer durables contracting by over 8% and consumer non-durables by over 3%. both these are worries because the consumption engine and the power consumption engine are indicating that there are problems on both sides, industry and as well as consumption. So here is a growth scare coming from the macro numbers that we got today.
It was very satisfying to note that the consumer price inflation last month it was 5 point, that is in the month of March, which really data was released in April, on April 12th. The consumer inflation, the headline inflation was 5.7%. And the inflation number for April, which was released today, 5:30 p.m. as I was just about to leave office, was 4.7%. It gives me and my colleagues in the Reserve Bank to say with reasonable amount of confidence, in fact, I would say with good amount of confidence, that the monetary policy is on the right track.
Okay, with that, it's a wrap on this edition of Markets Today. Thank you for watching and stay tuned to CNBC TV 18 for more updates.